Good evening and welcome to the FITT Show. Financial information for today and tomorrow. I'm Bobby P. Kinzer.
And I'm Thomas Doty.
And we are the FITT Show, helping our people get their finances in shape. Well, welcome back, everybody. We've taken a break. There were two breaks. The first one was because of the medical issues that I had that are totally complete right now. I'm feeling great. And the second one was Thanksgiving. We hope everybody had a great Thanksgiving. And I just want to just leave you with this remark from Thanksgiving. Tweet others if you would want to be tweeted. I love that, though. So anyway, we're going to start today off. Yes. We are the FITT Show, trying to help you. And remember, one of our main things is that you put comments into the comment box and click on the like button because that helps us, and the heart button. And if you on YouTube, make sure you subscribe and share with other people. We want to reach as many people as we can because the name of our game is we're trying to educate as many people as we can because you only know what you know and you don't know what you don't know. So we want to provide you. There's no cut card with us. We're not selling any products, and we are not financial advisors. We are financial educators. So we're not trying to give you information that meets your particular situation. Just remember, everyone's situation is particular, but the information we give you is information you can take and share with your advisors or share with other people that have advice and look at your situation and apply it accordingly. So with that disclaimer, I'd like to just say thank everybody for tuning in. As always, this is our 122nd show. And last week, our show was on choosing healthcare, which is a big one because, you know, our biggest thing is about growing wealth and generational wealth. But our main slogan is wealth without health is useless. So make sure y'all take care of yourselves and get the proper health insurance that you need because we do know that health insurance is very costly these days. So with that, and we're going to talk more about, we're going to get into some Medicare things on the show soon to talk to you about because everybody's confused about Medicare, aren't they, Dope?
That's for sure.
You know, there's so much. And one thing you must learn, you cannot call Social Security for information. For advice. You can find out about information, but not advice. Some people don't know that. And the same thing with Meta, and they're two different things. You call Social Security for Social Security and the payments for Medicare, but you call Medicare for the information. Just want to throw that out there. But this week, we want to talk about, is your health insurance adequate? And we're going to get into that, and we hope you understand home insurance is different than mortgage insurance. So we're going to get into that. But as we always start this show off, though, with the hottest topic that everybody wants to know, because everybody know that we're a pro stock market, but we do believe in be knowledgeable of what you're into. So, Doe, you've been on a roll, by the way. You know, the last time we talked to you,
man.
Are you still on that roll, or let us know?
It's been rolling.
Oh, Lord, Dote's on a roll, ladies and gentlemen. Where's the peanut butter?
November ended with a bang. It was the highest close since January 22, which is and that's for the S&P and Dow. Everything had a great month. Now the Dow jumped, I think it was 520 points today. That's part of it, but it was already up. And I realized this is 2 weeks because we didn't have a show last week. So in 2 weeks, the Dow is up 1,000 points, which is 2.9%. NASDAQ's up almost 1% at 113, and stocks I follow are all either up or flat, except for NVIDIA, and we're still trying to find out why that's took a big hit, and that was just today that it took this hit. And it could be people are taking profits. It could be the fact that a lot of insiders are selling stocks, and that usually people always figure, well, if the insiders are selling, something bad must be happening. But you just never know what somebody's situation is. They may have other losers and they're trying to offset some of their losses with the gains that they've realized in NVIDIA. And a lot of times they have options, they have company stock. So there's a zillion reasons why insiders could trade. One of the reasons could be they know something, but they're not allowed to trade based on insider knowledge. And I think we will probably talk about that at some point. But, and so that's the only thing negative that we can find. I think we saw where like $5 million of insider trading took place. So not
No, you know what I thought you were getting ready to say?
What's that?
Captain Obvious. I thought you were going to say, they know something that we don't know.
No, that's illegal. You can't make trades when you know something that the street that everybody else doesn't know. You can only make trades. And a lot of times in corporations, they have quiet periods in which the executives in the company cannot sell their stock. Like it might be 2 weeks before earnings are released, until 2 weeks after earnings are released. So there's a lot of things put in place. Now that's not to say that it doesn't happen, because I'm sure it does, but it's illegal. And so if you do that, I think that's what they put Martha Stewart in jail for, some insider trading. She's supposedly.
And the flip side of that is how it could affect things. I don't know how much it affect, but the flip side it could be that they're in a period where they can sell their stocks.
Yeah.
And that could be.
But I don't think that's true, only because they announced earnings. And you can't sell stocks. When they announced earnings, I think today, and the numbers were all real good.
Mm-hmm.
And as a matter of fact, the stock was up early. So something happened in the middle of the day that caused it to go down. And like I said today, I mean, NVIDIA dropped 14 points today. So that's a big hunk of that amount is down for the past 2 weeks. But I mean, for the month of November, it was just a great month for all three stock exchanges. The Dow was up 8.8%. S&P was up 8.9%. NASDAQ finished up 11% in November. And so this was just a good month. And if you look back at history, 75% of the time that November's real good, the S&P index is also up in December. Doesn't mean it's going to happen, but that's what history says.
And you know what the stockbroker's creed is? Past performances are no indicator of future returns.
Yeah, they always say that, but
to cover themselves.
Hey, that's a good omen. The fact that 75% of the time when there's a good November, it should roll into December and into next year. And all this is because everybody's excited because inflation is cooling.
Yep.
A lot of the indicators that they're looking at are showing that it's going in the right direction. And a lot of the fears about the Fed increasing interest rates is starting to go away. So that's what's behind this big positive push in the stock market right now. But I mean, things can change on a dime. If we get through the month and then they find out that some index is up, then it could easily go the other way. So as we always say, you invest for the long term. You don't worry about the little short-term ups and downs. You just plow ahead, and over time, the market has always performed well.
So they're projecting a soft landing because remember, everybody's fear was that we were going to go into a recession. So now they're kind of backing off the recession thing because they're saying that they're anticipating, and I forgot, something like up to 90% now of the street people are saying that Federal Reserve probably won't increase the interest rates until January and February, and then peed off and maybe wait until June, and that can have an effect on the market. And they're talking about they love a good news is they may not do anything in December. But though for 2023, for the year closing at today's closing, the S&P for the year is up a fraction of up in like about 19%.
Yeah, shit, NASDAQ's up like 35. So
and NASDAQ is they say almost double that.
Yeah,
So
but remember now, things were pretty ugly at the start of the year. So
right.
a lot of that is just getting back to where it was.
And
So,
and
you know,
that's another thing they talk about markets though, where they what is it called? Where they readjust, where they adjust themselves to really what it's supposed to be. It's called this. I forgot the actual title for it, but it
market adjustment.
yeah, that's what it is. So I did say the right term. Yeah, it's market adjustment sometimes is what's happening. You know, it's
Well,
not
Bob, there's so many variables going on right now
right.
that to try to figure this out, it is not simple, and we don't try to figure it out. All we do, Bob and I, is we invest consistently, and we know over the long term you're going to be okay. And we always say, don't invest money you can't afford to lose. Don't invest money that you're going to need in the next year or two. But even as bad as things were, things always come back. We've showed you multiple charts that talk about how the Dow always recovers after these downturns, after the bear markets, and it again, that's history. Not to say it's going to continue, but chances are that it probably will. And that's what we've based what we've done in our own portfolios, and we've been successful. And I just don't see it changing anytime soon.
And the cardinal sin is most consumers, investors, uh, in, invest when the market's up and jump out the market when it's down, which you should be doing the opposite. When the market is down, that's when you should be getting in. When the market's up, that may be when you should be either holding or selling. But
Well,
that's just a
and,
theory, one theory.
yeah, and I think that the right way to say it, Bob, is you should invest consistently.
And
When the
that's what
market
we
is
always talk
down,
about.
when the
Yes.
market is down, you look for opportunities for companies that are down because the market's down, not because they've done anything or have any negative news.
Right.
But I mean, like when Nvidia dropped to 406, and because the whole market was down, that was an opportunity to buy. When Microsoft dropped, and I've done that. I mean, I've made a whole lot of money doing that, reacting, looking for good stocks that are just reacting with the market as opposed to their own numbers. So yeah, I think the key thing is you want to invest consistently.
That
And
is
if
always
you
the
have some
key.
extra money, you want to look for opportunities when the market is
Go
down
down.
and not bail because it's down.
Exactly. And that's why we repeat this one term, because there's always terms that you should understand and ratios you should know about. Dollar cost average. I know you've heard us talk about that a lot, and that's what Dote is talking about consistently. If you got $50 and that's all you got, invest $50 every month. If the market's down, you make up. If your market's up, you don't. But over time, it balances out. It'll be cheaper and it'll cost you less money than trying to time the market and jumping in and jumping out when it's up and down. So, with that, though, I want to talk about the next big financial item is the cryptocurrency market. And boy, oh boy, the cryptocurrency market is on a roll again. Oh, before I go forward, though, and you know about me and my gold and my silver out there in them there hills, gold is $60 over 2,000. Remember, we kept going over to it, then it go under. It's over $60 over 2,000, man, an ounce. And the silver is up to $25 an ounce, man. So, and I think I got in it when it was $16 an ounce. So, just want to throw out that commodities thing for some of y'all who partake in commodities. No, the cryptocurrency market, man, the whole market is up 57 billion. That's 4%. That's a good uptick right there. The Bitcoin, the number one cryptocurrency, right? The first cryptocurrency created, by the way, in 2000 and what was it, 2009, though. But not just shocking, not just Somi, whatever they made up. And from 2 weeks to today, it's up $1,508 per Bitcoin. That's 4%. That's a 2 weeks from 2 weeks ago. That's a good uptick, though. If you were in,
You ain't
all you
kidding.
people, if you stayed in, you're looking good. I got in dope. I didn't get into it until 2021. I got into the cryptocurrency at 29,000 a coin, so I'm doing good. But actually, remember, it went up to 63,000 a coin in 2020, I think it was. Yes. So anyway, Ethereum, the smart contract uh, uh, cryptocurrency is up $88, 4%. Tether is up 1%. That's the stable coin, which is pegged to the dollar. And remember, we got rid of Shiba Inu tracking that because it's been dogging so bad. So we replaced it with Solana, who moved up from it was way down there, and now it's up in the sixth position, and it's been going up ever since we've been tracking it. Though it's up $1.33 per Bitcoin at $59.06 a um, a coin, a coin, excuse me. And that's 2% increase. And what's his name? Elon Musk and the guy from Dallas Mavericks, Mark Cuban, who tried to push the Dogecoin. It's been staying flat. It's up 1%. I mean, one cent. And the Dogecoin, a lot of people call it the dog coin. So with that, that is the cryptocurrency market update. I hope some of y'all people who partakes in this, I hope it fared well for you and all the other people who got in a little late. Remember, it's all about the long play. But if you need those losses, no one can tell you. Remember about tax harvesting. If you have some gains and you want to offset them, go ahead and realize some of those losses if you can't wait no longer. But remember, our theory is always it's the long play, baby. Don't forget that. Hey, Dope, let me tell you something, man. Most people these days, the home market has been kind of crazy. Actually, the prices are going down, though. I don't know if you checked out the
Some
house
places,
and some. Oh, right,
not
right,
going down here.
and not in DC, but Dope. Every day I get a new email from Zillow, the people who tracks the home prices, and there's a home going for sale in my radius of about 5 miles. I live in Bowie, Maryland, you all. That's 15 minutes outside, 10 minutes, if you can call that much, outside of Washington, D.C. And it's been interesting, the prices, but I do see the prices going down. But what a lot of things people don't understand, though, is, and this is the topic today we need to talk about, is your home insurance adequate? Do most people even think about that? A lot of people look at their auto insurance, people look at their health insurance, but what is it that you may not know about your home insurance?
Yeah, this thing, we decided to talk about this because we came across some things that neither one of us knew much about, and it's really really important. We'll get into it in a minute, but when you think about homeowners insurance, when you buy a home, most lenders require you to have homeowners insurance, and they'll usually tell you to make sure you have enough to cover their loan. Okay, that's what they're worried about. They're worried about getting their money back. But you, as a homeowner, needs to be worried about protecting your house if something happens, being able to replace it. And what homeowners insurance does, it protects your home against damages inside and out. If there's a covered event like a burglary, a fire, some natural disaster, some they cover, some they don't, depending on where you live. It's another one of those things you really have to make sure you understand. And it can provide you great peace of mind if you know you are covered. And so what we're going to talk about today, we came across this rule called the 80-20 rule. And your initial thought is probably, oh, that's where you get PMI insurance. And no, that's not it. It relates to the amount of coverage you have on your home. And in these periods of rising home prices, you have to make sure your homeowner's insurance keeps up with the value of the house. And that's what we're going to get into today.
And so no one buys a home expecting burglary, fires, or flooding. Now, the damage caused by these unexpected events is often an overwhelming expense that could easily drain a homeowner's reserves. That's why mortgage lenders typically require home insurance before closing on a new home. Long story short, homeowners insurance is required in most situations. Now, both home insurance and mortgage insurance are typically part of your monthly mortgage payment. While they sound similar, they don't provide the same coverage. Like Doe said, if you've made less than a 20% down payment on a conventional mortgage, your lender likely requires private mortgage insurance or PMI. Now, this only protects your lender if you stop making mortgage payments. It doesn't protect you, and home insurance protect both you and the lender. So we want to get into that discussion of what is the 80%, 20% rule with insurance companies.
Okay, yeah, let's get into it. What it relates to is the fact that the insurance company, in order for you to receive full coverage, let's say your house is destroyed in a fire, you have to have had at least 80% of the home's total replacement cost value. For example, let's say your home's worth $100,000 and it goes up in value to $200,000. But if you didn't keep your insurance coverage equal to what your house value has increased, the insurance company is not going to cover your house if it's totally demolished. And I didn't know this. This is something that was new to me, and we thought we better share it with you guys. So it's real important that you know your home's total replacement cost. That's what the cost would be to rebuild your house when deciding how much coverage to get. And it gets a little tricky because you have to understand, typically you buy a house and there's two components of that house's value. There's the land and then there's the building. And a lot of times insurance companies will say, well, whatever you pay for your house, that's what you should have insurance for. But being an accountant, I've always thought, well, unless somebody drops a bomb, in which case it won't matter what happens, nothing's going to happen to my land. So the land value should not change that much. What I really want to make sure is that my home is covered, the building, you know. And so you have to understand what your replacement cost is and make sure you have at least 80% covered in your insurance policy.
So, how do you calculate the total replacement cost? Now, replacement value is typically calculated, and stay with us, you all, because I know you might be, coming with a lot of information, but this is so important because me and Doe didn't even know this. And we feel we're both knowledgeable and we've had homes for a long time. So, the replacement value is typically calculated by multiplying the average local per foot rebuilding cost by the square footage of the house. As it can be complicated to calculate this total, most insurance companies can estimate this value for you. However, here are the essential factors that go into calculating your total replacement cost: the square footage of your home renovations and improvements. That's like changing flooring, appliances and fixtures, updating the roof, or installing new windows. Cost of replacing materials, labor costs in the labor. Check that out. Labor costs in the event repairs are needed. Value of interior and exterior components. Now, it's important to regularly review your home's total replacement cost value and adjust your home insurance coverage to ensure you're not underinsured. For example, if you've recently made renovations or home improvements, there's a chance you'll need to adjust your coverage.
Yeah, and let me give you an example. Because again, this was new to us, and it's a little bit confusing. But let's try to walk through an example and see if you follow me. Let's say you have a home with a total replacement cost value of $400,000. That's the estimated cost to replace your house. Okay, and you have home insurance that covers $300,000. So your replacement value is 400. Your home insurance coverage is 300. Now, let's say you have a fire that causes $250,000 worth of damage. Now, your first thought is, well, I got 300,000 of insurance, so that 250 should be covered. But that's not how it works, you know. So to meet the 80% rule, you'd have to have at least 320,000. That's, you take the 400,000 replacement value times 80%. You need to have at least 320,000 in coverage. Okay, so if you don't have at least 320, your house they won't pay the whole 250. They'll do some kind of ratio and say you didn't have enough insurance. And it seems like that shouldn't be the case, but that's how it works. You really need to understand your insurance policy. And I know we always tell you a lot of things you should check, a lot of things you should review. But as you gain assets, there's more work that you have to do. And this is one of those, this you can do once a year. You can review your replacement cost value, and your insurance agent should help you with this. A lot of back a while ago, they always had inflation riders that automatically increased your home insurance based on what inflation in your particular area did. But you need to make sure you have at least 80% coverage for replacement value, okay? And your insurance company should be able to help you figure out what the replacement value is on your home.
And that's called the total replacement cost value of your home. And that was so eye-opening to me and Dope. When Dope first told me about it, I said, oh yeah, 80%, that's the PMI. You know, if you only put, 20% down, and he's like, no, Bob, this is dealing with home insurance. I'm like, whoa. So that brought us to the question of what are some of the things that home insurance doesn't cover? Now, home insurance protects you from a lot, but not from damage caused by floods, earthquake, sinkholes, water leaks, and a number of other dangers like fires, hurricanes, snowstorms, stuff. Unfortunately, there's no shortage of bad things that can happen to your home and its contents. The good news is you can help protect your investment by getting home insurance. But like other items of insurance, auto, life insurance, travel insurance, not all home insurance policies are created equal. That's why you need to review your policy specifically on an annual basis. And many home insurance plans contain gaps where you're not covered for certain events. Well, we'll explain what is and notably isn't typically covered by your home insurance.
Okay, so what does it cover? So a basic home insurance policy pays repair and in some cases completely rebuild your home and other structures when damaged from certain events. And you need to understand what those events are. Most home insurance policies provide 5 types of coverage. There's the dwelling, and that covers the damage to your house, structure attached to your house, such as a porch or garage. Other structures, this might be damage to fences, sheds, freestanding garages, structures that aren't attached to your house but are located on your property. It covers personal property. This reimburses you for possessions, including furniture, electronics, appliances, clothing, if they're damaged or lost in a covered event. And it also covers loss of use. This will pay for your temporary living expenses, such as hotel bills or meals while your home is being repaired or after disaster. And finally, there's personal liability. This covers the cost of medical bills for people who get hurt on your property and your legal fees if the person sues you for damages. Now, the one thing to make sure with this is that you understand what your limits are on each of these components, because they're all different. And in some cases, you might be required to have flood insurance. In some cases, you don't. But those are the 5 things that most insurance companies cover.
Now, the other question is, does home insurance cover damage from natural disasters? What do y'all think? Most policies cover damage to your home from natural disasters, such as tornadoes, hurricanes, lightning, snowstorms, and fires. They also cover damage to detached structures located on your property, such as your shed. And that's the interesting thing, detached property, your garage, your fence, or even a gazebo.
Okay. Next, does home insurance cover what's in your house? It certainly does. It covers the contents of your home from damage or theft. But keep in mind, if something happens, you may need to provide evidence of your belongings to the insurance provider when you file a claim. And the best way to do that is, and again, this is one of those things, another to do. It seems like we always give you guys things to do. But walk through your house and take a picture of everything in your house that's valuable, put it on a flash drive, and store it someplace not in your house, okay, in a safe deposit box somewhere. And that way, if something happens to your home, you can say, yeah, I had an 85-inch TV here. Here's a picture of it. I had this expensive stereo system. Here's a picture of it. I have Ethan Allen furniture. And then obviously, if you have a receipt, that's even better. But most people aren't as judicious about keeping receipts as they should be. But if you have pictures, that should provide enough evidence so you can get your stuff replaced. And the other thing to remember is with insurance is jewelry, which I think we'll get into in a little bit. But
No, that's a big one. Jewelry is a big one. Take pictures of your jewelry, and you might have
well,
receipts.
but the only thing, most policies only cover jewelry up to like 1,000 or 2,000 bucks. So you have to make sure you get a separate policy if
Right.
you have jewelry, and you have to have it appraised. And usually there's a cost to do that. And that's one of those things. Most people, don't lose their diamond ring or don't lose their Rolex or Breitling watch or whatever they have. But if you do, and you don't have on a separate policy, then it's not covered. And it's real inexpensive to buy those types of insurances. I'm thinking a wedding, you might have a $20,000 wedding ring, and it may only cost you $100 a year to add that rider onto your home insurance policy. So take a look, and if you have something of value, get that peace of mind from having it insured.
Yeah, that's the truth, though. I mean, that was a good tip about taking the pictures of it, man. I never thought about that. Now, does home insurance cover short-term living expenses? Once again, every policy is not created equal, but temporary living expenses during loss of use are covered under a typical home insurance policy as well. This covers pays for short-term living expenses such as hotel bills, meals, and other expenses listed in your policy while your home is being rebuilt after a disaster. So some policies place limitations on reimbursement limits on temporary living expenses.
Now, does home insurance protect you from lawsuits or people get injured on your property? For example, your mailman trips and falls and hurts himself, he can go after you. And your home insurance will cover that. But again, that will be up to certain limits. And this is another situation where you may need to have an umbrella policy, which is an insurance policy over your homeowner's insurance policy, just to cover those crazy kind of accidents where people come after you personally and sue you. And they're pretty inexpensive to get. For example, if you have a teenage kid and you have auto insurance, your auto insurance policy has limits. And so if for some reason your kid has a wreck and it destroys a tractor trailer that has a bunch of Mercedes on it, in most cases, your auto insurance will have a limit and it will only cover up to a certain amount. If you have that umbrella policy over your other insurances, it will go into effect when you have those crazy out of the way things that happen. And because they are very unlikely to happen, the cost of that umbrella policy is very inexpensive. But again, once you start accumulating assets and have things that people can sue you for, people who will sue you for those things, and you need to have insurance to cover those things.
Garnett
Why you laughing?
Garnett said, "What a ripoff!"
You need to hear Chris Rock talk about insurance. he,
Right.
he has a hysterical skit about it, and it's true.
So we talked about what it covers. Let's talk about what does home insurance not cover. There are a number of potential changes or liabilities that a standard home insurance policy does not protect you from. And here are some of the most common ones. Does home insurance protect you from a flood? A standard home insurance policy does not cover damage to your dwelling or detached structures from a flood. If your home is located in a flood zone, your mortgage lender will likely require you to purchase flood insurance from the federal government's National Flood Insurance Program or from a private insurer. Now, flood insurance typically costs an average of about $939 per year, and but premiums can vary depending on your property's elevation and other flood risk factors. So you can get price quotes from floodsmart.gov, which is a government um, entity. So it should be very reliable. Capital F flood, capital S smart, one word, floodsmart.gov.
Yeah. Okay. Does home insurance cover earthquakes, landslides, or sinkholes? The false thought would be, well, of course it does, but no, it doesn't. It doesn't cover damage from land movements, such as earthquake, landslides, or sinkholes. And if you live in like California or places where they have a lot of earthquakes, you got to buy a separate policy to cover yourself from those. And just like in flood insurance, there are certain areas that are considered most at risk for those. And in some cases, the lender may require you to have those types of insurance. And in some cases, you may not. And you could find yourself in trouble if that was to happen to you. When I lived in Pittsburgh, there was this big thing because there were so many coal mines in that area. There was this thing called mine subsidence, where houses were shifting because of the mines that were under the homes, was causing land movements and creating big expenses for people who may not have had insurance to cover that. And so it's one of those things about doing research when you move into a new area. That's one of the million mistakes I've made in my life. Back in '81, I moved to Columbus, Ohio, and ended up buying a home. Didn't know it was in a flood zone until I went to close on the house. And so you have to have flood insurance. And at the time, it was pretty inexpensive. It was only like a couple $100 a year, and didn't have a flood. But again, you got to do your research before and see if you're in a flood zone. As Bob mentioned, the lender is going to require you to have insurance, and it's kind of crazy with the folks in Florida because they're going through some craziness right now because a lot of the insurance companies are just leaving Florida. And the state government was covering some of the damages from people who didn't have insurance, but it was first come, first serve. So if you didn't get there quick, you basically lost out. And so you got to look at where you live and look at the risk and make sure you're covered for those risks.
And that brings me, I want to remember down the road that, we know a lot of people on here own homes, but then there's a lot of people who might be first time home buyers and things because there's so much that you need when you get ready to sign for that house. Like you said, when they come up with you need flood insurance. 'Cause I remember when I was getting ready to sign for our house here in Bowie, they come out with this disclaimer. Oh, um, you know, you got to sign for airplanes and helicopters. Like what the? But I forgot I live near Andrews Air Force Base, where Air Force One is, and where the president flies out of, and they fly over my house. So every now and then I hear this. Whoo. I'm like, them must got me because would you not going to sign now because there's something that you didn't know about? But we're going to have to talk about that though on home ownership. You know, when you sign that document, because a lot of people need education on that. Now, this is a tricky one though. Does home insurance cover water leaks? And some people are saying no, they don't. But home insurance covers damage resulting from water leaks when the leak is sudden or accidental, such as if a pipe were to burst. But insurance does not cover damage for leaks that are a result of poor maintenance on the part of the homeowner. For example, if a homeowner fails to remedy a slow leak that causes damage over time, that is seems so tricky though. How do you prove that? But that's interesting about water leaks.
Yeah, and it's funny, you think about the good hands people and you know, State Farm is on your side or all that. A lot of times it's their businesses. And so they are trying to minimize their costs. So if there's a claim, then they're looking for ways to minimize the cost. That's just how business in this country works. So you have to be diligent and prove or have proof that you've indeed had a loss, that it wasn't your fault, as Bob was mentioning. You may have to prove that. So if you can, make sure you do. Okay, let's talk about mold, because that's another one that's becoming pretty big. Does home insurance cover mold? Not usually. Okay, unless it comes as a result of something else that happened, like a water heater burst and it caused flooding, which eventually leads to mold. They'll cover it in that case, but it's not covered when it was caused by neglect, such as you had a leak and you didn't deal with a leak, a pipe leaking under the sink for months, which result in mold growth. So again, you have to prove that you weren't negligent in order to have a claim for mold. And in some cases, you can make sure your home insurance policy covers these extra things. In the people I'm dealing with, it's called an all risk policy. You pay a little bit more, but it covers some of those things that don't usually happen, but might. And I just would rather be safe than sorry.
So, I want to share this from Kitty. Kitty said, my mom's house was flooded 6 years ago from heavy rain after a hurricane. The damage to her city was not declared a flood. She didn't have flood insurance and had to get a loan from the SBA.
Oh
Wow.
wow.
And Kitty, if I'm right, your mama's in Virginia. She's still in Danville, Virginia. Is that a Danville, Virginia thing? So yeah. Thanks for sharing, Kitty, because that's like I said, if you need to review those policies and really understand what's happening. And Dote, I want to make this point. I know we talked about um, home home insurance, home people that own homes, but this also applies to you people who are renting. There's renters insurance also, and you should make sure. And most renters don't have renters insurance, but this applies to you also, right? So,
Sure.
so please keep that in mind, you all, because that is definitely something that we need to consider as renters. Next thing I want to talk about is does your home insurance cover expensive jewelry and collectibles, right? So, now, valuable possessions such as jewelry, art, and collectibles are not covered under a standard home insurance policy. To insure these items for their full value, which Dope was talking about, you need to have them professionally appraised and purchase a personal property endorsement, or what they call a floater, to the insurance policy. Now, rates can vary between providers, but you can expect to pay about 1 to 2% of your item's value. That's according to Geico. Now, for example, a $5,000 engagement ring could cost as little as $50 annually to insure.
Okay. Does home insurance cover home office equipment? That's another one. With so many people working from home, your first thought would be, of course it does, but it does, but it has usually very low coverage amounts. In most policies, it will only cover up to 25% for business equipment. So if you have a computer, fax machine, or just a bunch of office equipment, printers, and all that stuff, you'll need to make sure your policy covers enough to replace everything that you have. And again, it's pretty inexpensive to raise the limits on things like office equipment in your house, just as it is on jewelry. It's not expensive at all because, again, those things aren't very likely to happen. But it's always better to be safe than sorry, especially for things like an engagement ring or a diamond ring. The rock may fall out of the setting. You may lose it in the gym. You may, a whole bunch of things that could happen. And it behooves you to have insurance on that so you aren't out of luck if you do lose it or it's stolen or you're robbed or lost.
Yeah, I mean that's something to be seriously be aware of. But it's a lot of this stuff. A lot of people may know dope, but sometimes uh, people people just they just don't know what they know, and then they get caught in the bind, and then all of a sudden their reserves depleted because they got to cover stuff that they do. So Kitty saying Bob was talking about Air Force One today with coworkers, and on this Throwback Thursday, I remember the day I received a phone call from Air Force One in December 2005. My Hurricane Katrina White House detail. Oh, Kitty, Muckety Muck got a call from Air Force One. Excuse me. I thought you just was the master Toastmaster. So with that dope, as we always do, we covered a lot of information though. So let's do the summary and takeaways. And hopefully we can recap some of this and some things that would stick in your mind. And we know it's a lot. You can't remember everything, but these are some things we want you to definitely consider. And the first one is review your home insurance at a minimum annually. Like we say, there's so many things that could go on and that affects your coverage. And I would like to think, though, that most people are probably underinsured. And you need to review so that you're not.
Yeah. Make sure you understand what's covered. Make sure you understand exactly what your policies cover. You may have to ask your insurance guy, is it a all perils policy, in which case it will cover most anything that happens. You really need to know what's covered. Like if you have an office equipment, you need to know what's the coverage limits on all those things, especially if you have a particular situation that's a little unusual. Make sure it's covered, or you could end up with a big loss.
And the opposite, make sure you understand what is not covered. Those are two separate things. And so I have so many friends that was caught with that. They thought they were covered. And, like Kitty said, her mother wasn't covered because, she didn't have flood insurance, didn't know that it didn't cover it. So make sure we gave a list, and you can always go back and look at this show. It's archived on Facebook and on YouTube, and look at those things that are covered and not covered.
Yeah, you got to be aware of life-changing events that can affect your policy. And in some cases, you may need to notify your insurance company. For example, if you get a dog, your policy may go up a little bit because that's a added potential liabilities creating situation. If you have a dog and your dog bites somebody, they may sue you. And in some cases, the insurance company may charge you a little bit more if you have a dog. If you buy an expensive piece of jewelry, we talked about that, getting a separate rider for that jewelry or collectible. If you have a swimming pool, a lot of times you'll have to pay a little higher insurance because there's a chance of someone getting, of an accident happening in the pool. Same thing with a trampoline. You need to make sure your insurance agent knows what's in your home to make sure you're adequately covered. And if something changes, and as Bob said, review your insurance every year. And you do that because your home value may change. Bob said in some areas, house values are going down. Well, you may be able to lower your insurance and cover, lower your insurance coverage and save a few dollars, or you may use those few dollars to expand your coverages for things that may not be covered. For example, jewelry or a collectible that you have.
Yeah,
So
some artwork that you have.
exactly, because it's the limit on those kind of items are typically around $1,000 or $2,000. And if you have an expensive watch, that'll easily dwarf that amount, or a ring, or certain artwork, or things that you are really important to you that may not be important to the insurance company. You need to make sure you have documentation of what you paid for it or what it's worth at this time, and make sure you don't need a separate policy or a rider. And also consider an umbrella policy if you're in that situation where you've accumulated a lot of assets and you have something that somebody can sue you and get, because your coverages are so low on your auto or home insurance policy. So you need to look at that and see what your liability insurance coverages are. And if they are low and somebody sues you, they'll come after your personal value. I'm not a lawyer and I'm not trying to be, but make sure you have enough coverage for what may happen to you.
And I just want to give another a tip on the tip where you said take pictures of some of your items, that to prove that you have them. It should, and it's our hopes that none of these things happen. But we know how life is, right? Any of these things can happen to anyone, right? But you made me think though when you said take a picture of things and don't leave it in your house. Because what good is it if you leave it in the house and the house burned down, right? So that's why it's good to sometimes have a safety deposit box at a bank, because especially like those appraisals that you had on your wedding ring, on your jewelry, and on paintings and stuff like that, you don't want to keep them in your house. If something happens, the house go down, then hey, it's gone. But that's why it's good to even think about having a safety deposit box. Another thing is, like Doe said, you can take a picture of those things, and this is the key, though, of taking a picture of those things instead of having them on a USB drive sitting in your house. You could save them in the cloud.
Or video. Just walk through your house and video what you have. Then you got one thing that has all your values on it. And again, make sure it's secure.
And the key is, though, you kind of can't leave it in the house, because if the house burned down, that'll burn the video and the USB drive. So make sure, because the technology now, you can save videos and you can save the photos in the cloud. And that way you don't have to worry about having them physically in the house. So once again, you all, we know there's a lot of information. If you want to recap, please go out there on Facebook Live in our archives and look up today's show under the title, is home insurance adequate? And if you're on YouTube, you can do the same on YouTube. It's archived and they'll be out there. But we want to thank everybody for joining us once again. We're heading into this Christmas season. A lot of people, they said, though, spending is up. By the way, that's what's also been helping the economy, by the way. People have been fueling the economy, but a lot of people spend a lot of money coming up to this time of the year. So we're going to be talking about some things going forward, but make sure you don't get caught with all those sellers, marketeers that try to get you to spend more money in this season. And if you can, I know it's tough, but for some of the people that you had gifts, won't you wait until after Christmas when the sales are down and then give them a Christmas gift? You'll save a lot more money. But
Or buy Black Friday sales.
Man, don't stop with Black Friday. They had a whole.
Hey, but I got to tell you, I got a call last week, and it was from this guy who said he was from Customs Border Patrol, and that they had intercepted a package that was coming to my house. And in that pack, they intercepted it because it had cocaine, heroin, driver's license, and social security cards. And it was coming to me, and they wanted to file a report. So I listened for a while, and then I finally said, "Ain't nobody sending me no drugs," and I hung the phone up. But the scammers are out there. Just be diligent about not falling for them. They're working overtime. And that's a new one. I Googled it, and that's exactly what's happening. They call and say, "It's a package intended for you. We got to clear this up. We need to get some of your personal information so we can make sure we don't have to come and arrest you or things of that sort." So just be diligent during this Christmas season of scammers and people trying to steal from you.
Kitty said, "The last day of November. See you in December." So, go. I got an idea on how to beat these scammers and these people that be stealing the packages on the front or to be on your front porch. What do you think about this idea? And I'm not even going to charge y'all for it. If you want to get rid of some stuff in your house, some old stuff, put it in those Amazon boxes and put them out on your porch, and the mugs go steal them, and you don't even have to go and take your stuff to the dump. What do you think, though? You don't think that's a great idea?
That might work once. But the one thing, I mean, especially with Amazon, I don't understand why more people don't do this. They have those lock boxes where you can go 24 hours and pick stuff up.
Right.
If you're having something of value coming to your house, don't have it come, and you're not going to be there. Have it go to a lock box. You go there, you put some digits in, the door opens, you get your package, and you go home. So just, be smart about it.
Yep. So want to do roll call. Call Chapman. Thank you, my brother. Hope this was useful information for you as always. Thank you for tuning in. My wonderful sister, Linda Kinzer Sai. How you doing, darling? Thank you for joining in. She said, "Happy holidays to my friends." And my sister, Gloria Rena Kinzer Browner. So glad that you're sticking with us. Hello, Garnett. What's happening? Joanne Skinner. Always glad to see you. And the wonderful Kitty Cheney. Thank you for tuning in, Kitty, as always. We really appreciate you. And Kitty said, "I was Cash App scammed. My bank did an investigation and put the money back in my account." Wow. Yeah, that's the thing about those daggone Cash Apps. And so make sure y'all are secure. And the key to the Cash Apps, know exactly who you're sending them to. Don't be just sending this to somebody, some company. No, because once you send it, it's gone and you can't get it back. So, Kitty, you're very fortunate that you were able to receive the money back from the bank. And you must got a good bank there. So, with that, you all, we see you next week, show 128. We look forward to you, and we look to see you again. And remember, tweet others like you want to be tweeted. Have a good day.